I'll put him off.
Yeah.
So we are back again on the Fireside Chat. We have combined 2 sessions together and made it into a Fireside Chat. That's Invest Crypto, Staking and Lending, Risk and Rewards. We have 3 persons on the panel. One is Miru Patel. He's the CEO, Sapian Group, COO, Flash Group. He's from UK. Miru is a business advisory with skills and experience in IT, serial entrepreneur, award-winning public speaker, motivator. And we have Christian Kameir. He is the managing partner, Sustany Capital, Newport Beach, USA. We have Mark Bad, co-founder, advisor, Kenneth. He's from US, but he has got audio props. So if its audio is rectified, you can join in. Otherwise, we'll be starting the session with Miru and Christian. Go ahead, Miru.
Okay, hi, my name, as Rajan said, Miru Patel. So I think the whole point of this Fireside Chat was, Mark, unfortunately, he's got problems with his bandwidth, was to grill me with my 30-odd years. But Christian and me, we had a little slight intro chat earlier, and we were talking about the early .com days. So for those of you who don't know me, I have been right from the start of the .com with Sun Microsystems, Java in the Valley and around the world, and Siemens and Unisys and IBM and all those people in the tech, left the corporate world and been doing my own private real estate investment funds, digital banking, DeFi, NFTs, all of that new tech stuff for the last 5 years. So the whole blockchain space, as Rajan said, I speak around the world, written books, la la la. Won't bore you, but let's get straight into this chat.
All right. Well, I'll take it from here. So
yeah, absolutely.
So just very short. So I was a software programmer at Siemens. You mentioned Siemens early in the 80s.
All right.
But then went
I was in Paderborn with Nixdorf before that, if you really can go that far.
That's exactly where I was.
My God, we must have met. What a small world.
Yeah. That's exactly where my internship was, 1984. Anyway, so
that's God.
Everybody else here. So thankfully, I realized I wasn't the best coder in the world. Went to law school. After law school, joined one of the first internet service providers as a general counsel. So we were selling dial-up services. Then we got very lucky selling this company at the height of the .com, and I left Europe, moved to Southern California. We set up our first venture fund in 2000. Our original focus was on voice over IP solution, multi-massive online player games, and people who are familiar with the blockchain space probably see the similarities. In-game currencies were already a thing in the 90s that had a dollar exchange rates. And then voice over IP is what we're using right now as kind of the most used peer-to-peer solution in the world. So we were one of the first allocators in Southern California into the blockchain space. My partner formed the Ethereum meetups here in Orange County. That's how we met. And we started investing in the space, starting building our thesis in the space. Yeah, and so that's what we're still doing today, ever expanding. And what I'm most excited about is building really the stack for the World Wide Web for the first time. I don't think we actually built the World Wide Web. We built kind of the commercial web, but let's not go too deep into that.
I was there in the 90s. I was there in the 90s with Sun when we started all that .com days, anyway.
Oh, yeah. I had one of your switches sitting in my office that I paid $500,000 for longest time at the doorstep. What are you most excited about, Mario?
So I'm big into helping people get investment, wealth, contributing into the whole ecosystem. So what we actually build is the whole financial disruptive technology where people, instead of paying for a lot of these financial services and a lot of the banks, the REITs, a lot of the funds, hedge funds, a lot of these people, card companies, and all these people in the financial institutions world, for want of a better word, tend to have lots of fees and lots of middlemen, lots of brokers, lots of agents, sub-agencies, lots of high street and headquarter overheads. We try to cut all that down. So we have our own financial digital wallet. We have our own exchange. We have our own coin, which is pegged against gold. So it's a lot more stable than 99% of the coins out there. We also have our own encrypted cold storage cards with NFC and a fingerprint, so secure transactions. And we are getting into the next phase of DeFi, as well as we are getting into the next phase of all the different wealth creation products as well. But what excites us the most is how to bring all of that to justify our mantra, which is financial inclusion and beyond. So that's what we do, bringing financial inclusion to all the people, to the average people, and make banking paid rather than people paying us to bank with us. So we doing those sorts of technologies, those sorts of incentives, how people can get paid to just bank with us, really.
Right. So, I mean, we have reviewed all the central bank digital currency papers that came out over the past couple of years, and we advise on a lot of those. So one thing that stands out to me is they talk a lot about payment and onboarding the unbanked. But I think what gets lost a little bit that the primary function of money is not that of payment, right? It's of lending. And the way that banks make money is not by lending money, but by creating money. So how do you think that DeFi can compete with that, given the fact that they cannot create money?
So they're already doing that. If you think about it, what's happening just now is where you have banks who take clients' money, and basically what they do is offer it back to the same or different clients. So they take it at 1%, and they sell it back plus 2-3 points, whatever percentage of what they are taking back from the clients. Okay, so what DeFi is doing is they're doing a lot of what I call the peer-to-peer, or PFI is what I call it, going beyond even DeFi. So they're doing the peer-to-peer lending. So where the client can say to whoever through smart contracts is, if you need the money, there is a smart contract in place in the blockchain written there for life. I will lend you based on these conditions, based on these collaterals or securities, whichever type of transactions you have. So all these flash loans that you see currently on exchanges is based along that, where liquidity is created from the clients directly. It's put in a secured environment where you have assets. So if someone wants to borrow, they will go and say, I want to borrow to do, I don't know, leveraged finance or leverage trading or futures, derivatives, whatever it may be. So the lending is coming from that, and the borrowing is also coming from the high net worths or people who have assets like in crypto sitting there doing nothing. So the hodlers generally say, you know what, we have the cryptos, we'll put it there, we'll hodl, we'll stake it, farm it, whatever we do, and we're happy with 5, 10, 20% returns, because no bank in this world gives you that sort of a return. So they are happy for a low risk because it's collateral and risk free. And the people who borrow, they are happy because they can do whatever they want because they've got their collateral to loan against. So all these the Huawei's and the Wi-Fi and Yiffy, as we call it, and the flash loans, all these people are already doing that loaning through the exchange. The exchange plays like the bank and an exchange for a fraction of the cost than what they would if they went through traditional middleman brokers or banks and things along those lines. So that's where it's going to just now.
Okay. So if you look at the current lending space in crypto, those are all digitally native assets. So those are all over-collateralized loans with digitally native assets. So if and when things like CBDCs happen, where do you see stablecoins go? Where do you see the relevance for stablecoins?
That's a very good question. I get asked this for the last 2-3 years. In fact, 3 years ago, at an event in San Francisco where the infamous Tim Draper and Gary Gensler meeting happened, I was there on stage there with the guys. And in those days, it was all ICO. And I said, I'm not with ICO because I came from real estate investment fund. And I'd started it, so I know what securities mean, okay? So in terms of security, I said, this won't take off because if you're not putting some form of a security, even if it's a coin, the general 99% of people won't get it. Okay. And at that event, even I said, forget Bitcoins, Ethereums, and Ripple was new as well in those days. You need some form of a coin where it is collateralized. That's why we're doing gold pegged coin, where it is known over decades that it's never going to drop like what we see. In fact, even just this weekend, you saw Bitcoin go up to 57,000. Today it went down to 47,000. And when I last looked, it was settling around the 53,000 before this call. So they don't want that level of volatility. So CBDC, in my view, is absolutely the way to go. And I've even gone a step further to say China a year ago started that. And year before, I spoke at an event in Beijing. And I was telling the people there, what you guys are doing as a pilot will really put everything, out there, cat amongst the pigeons. So where the dollar trades just now at something like 7 trillion a day with 70% market share, the Chinese and their digital yuan, and I'm sure you know that, is already out there, and they've already said we are not going to peg against the dollar for international transactions. So the dollar price will come down until they do something radically different. And I see CBDCs being very, very, the way forward for a stable environment. However, the people in the crypto space will not see it that way because, again, it's intrusion into your privacy. It's intrusion about all sorts of ways, the government, police, and things like that. So the crypto space will not be killed. But the security tokens, the USDT, Cs, and all these variations will be affected.
Right. So in terms of the current state of money market accounts, certificate of deposits that barely pay the inflation rate. So when CBDCs had, what do you think is going to happen to that equilibrium? I mean, right now you can make great returns on digitally native assets, but once the general market enters the space, where do you see this play out? And or will M1, like demand deposits accounts, still exist, do you think?
Yeah, I mean, bottom line, they will exist. They will coexist. Both scenarios will coexist because each one is trying to find their feet. So the security types of coins like the USDTCs and all this will ease down, in my view, where transactions will move over to a digital government-based currency. However, here's my vision on that. I think the governments will then say, you know what, we are going to make all these other ones illegal. And when that happens, that's when you'll see it tumble. Because in China and places like that, they already say, we don't want USDT-based transactions. We don't want these types of exchanges. We don't want these types of coins. So I will see, just like, when gold was taking up in the 1930s or whatever it was, when the whole world was saying, store of value, it went up until a point where the governments entered and said, you know what, we're going to bank it. And Roosevelt banned it. And it's only in the late 70s, 80s, they made it legal so everyone can buy into. Why? Because they got majority of the market in their reserves. So what will happen, again, same with CBDCs. They will ban, in my view, a lot of the stable pegged or a lot of the stable currency pegged currencies and say, you know what, it's banned. So they'll ban it. And then what I think will happen is that they will stipulate that all transactions coming in and out of this country will be based on this currency. And China has already started doing that. So in my view, in the next 5 to 10 years, China will overtake American economy, in my view.
So yeah, there's this old Chinese proverb you probably know: the emperor is far away and behind many mountains, or something like that, right? So China also bans iPhones, and every Chinese official I ever met had an iPhone. Correct. For some reason. So I think in practical terms that's probably going to be hard to realize. I certainly see the efforts of the government to clamp down on capital controls, but like in practical terms, don't you think that something like the US dollar is really living off its international network effects, and so that you will always be subservient to that? I mean, it's a network technology, don't you think, at the end of the day?
Yeah, and I think in my view, they've had it too good, too long. And what crypto and CBDC is trying to do is disrupt that. Now, depends on what comes out of this whole SEC saga with Ripple as well just now, because quite a lot of the governments are using Ripple as a form of a currency to do their CBDC implementations. You know, US might say, I don't know, and I read somewhere, you know, Wyoming is already trying to do something like that as a legal dollar digital currency in Wyoming. And I forget the lady's name, one of the banks. Anyway, no need to advertise, but or so away. If they manage to do that, the rest of the US will stand up, look up, because if you think about it, most of the big high-tech industry and where most of the money is going in, they are formed in the Delaware and the Wyomings of the world anyway. So the money will start moving through that mechanism, if that answers your question. Sorry, Chris.
It does to some extent, but right now, if you look at...
Can you hear me?
I tend to look at things from a global perspective. So from a global perspective, RMB makes about 2% of the reserves in global currencies, whereas the dollar dominates with 64%, to the extent that you can go in any supermarket here in Mexico and pay with US dollars, no problem. They don't even argue about it, right? And that's true for a lot of other countries, right? So don't you think at this point in time, money is essentially just a language, it's just a unit of account, and the default medium of exchange has been bytes, so people don't really care, right? So they care that you can use it, so that it has a utility as a technology, and no one really stores value in it, right? So you don't keep like a mountain of cash.
Absolutely correct. Absolutely.
So to that extent, I'm mostly interested in like your
utility, yeah.
And where do you make it available? And does your wallet support a vast majority of network users looking at network money as a network technology, right?
And you know what? That's a very good angle as well. Money is whatever someone values it at, okay? So it's a piece of paper, and what's now happening is people are getting away from that piece of paper. So someone just has to say, in Mexico, our currency is X, and if that is a CBDC type of currency, they'll say it's this. Okay, so the price of potatoes or beer or whatever is X, and that X will be translated to any currency anywhere in the world. So a lot of people are doing that, ourselves included, where on the fly, you just tap your card or tap your phone and you pay, but you're not paying with the currency of that country. You're paying in crypto, which converts on the fly through an exchange at a much better rate than going through an ATM and paying commissions, than going through a bank and withdrawing money, going through an exchange house and exchanging your dollars to GBP or euros or whatever it may be. So all that middleman thing will go. So the convenience of holding a wallet with what I call on-chain, cross-chain, off-chain types of transactions, you'll be able to do across Ethereum, Bitcoins, Ripples, our OZTGs, whatever currency you choose to hold based on what you are getting the highest benefit of. Just now, if you hold your money in your wallet or in your bank account, you get square root of nothing, 0.1% if you're lucky. Most of the crypto players just now offer you minimum 7 to 8% per annum by just holding their coin. And there are so many others who offer 20 plus. We offer a lot more than that because of the way we do our velocity on our gold-pegged coin. But you see, so if you're earning money on your coin on a daily basis, why would you want to hold it in dollar? Just pay in the dollar when you have to and you exchange it. But the flow of money will go to some of these organizations that I just mentioned, what we are doing as well.
Yeah, so thus far we have seen that the kind of centralized finance solutions are actually way more successful than the decentralized one. I mean, for full disclosure, we are an investor in Celsius as well. And so to that extent, I'm always curious how people explain the APY and APRs, because all of these things are over-collateralized, right? So what is your definition of how do you define those APRs and APYs in that space?
I hate the APRs, I must admit, because in that people hide a lot of what the annual percentage rate really is. The yield is, in my view, a better way in the crypto space specifically, is because you can say, look, I put X amount down and I'm getting a compounded interest on, or I'm getting a fixed interest on. With the APRs, how are they measured, what they do? It doesn't matter. At the end of the day, both systems tells you if you have X amount in your wallet or in your custody, wherever you decide to store it on the exchange or one of the centralized exchanges, then you are earning a yield or a return on your investment for just keeping it there. What they do behind the scenes, like what we do, is we have our own masternode program. So the masternode programs does all that verifications and various transaction-based, validity-based, governance-based stuff that most banks charge you a fortune for. And we share whatever the revenues or the coins that are the fees that are generated from those transactions, and those fees we split with the customer. So I can't see Swift or Visa or a bank splitting their fees with the client.
Yeah, I mean, they can. They have a lot of infrastructure costs, and that's a big.
But they're not doing it. That's what I'm saying. They're not doing it.
Yeah, and plus banks make 30% of all their revenue from payment functions, right?
Correct.
And they make the rest from actually creating money. Right, so banks don't make money from lending money outside of the uncollateralized one, which now I think that's probably the missing piece. So what I mean,
as you said, Christian, sorry to cut across you, sorry, buddy, is the transactions 30%. So imagine 7 trillion in the whole financial system going per day. Transaction fees on that is huge. Okay, it's huge. And they don't share that. That's why they have thousands of people, big glass houses, buildings, and huge salaries. So what's happening in the crypto blockchain payments and all this space is people generally don't take those silly number costs into account. So the costs are very low for the infrastructure.
Yeah, so payments is 2.1 trillion in 2020. That's the alpha that make.
That's right. There you go.
But I'm more interested in the non-collateralized lending part. So what I mean by that is it's going to be a long time, or the DeFi banks that want to be relevant actually have to get formal bank licenses so that they actually can create money that are collateralized by real world assets. But the interesting part, I think, is more in unbanking the unbanked by providing lending solutions to them that are non-collateralized. So credit versus lending, right? So have you seen anything interesting within that space, someone who's trying to create credit scoring systems at scale? And I think we lost him or we're out of time.
Okay, we back. Sorry, Christian, you got frozen there, buddy.
Can you hear me? Can you hear me?
Yeah, yes, but you keep cutting on and off, Mark. You keep cutting on, off, if you can hear us.
So
it sounds like you can't hear us.
Yeah, so intermittently what I was saying is, so the collateralized part is semi-interesting. So it's the interesting part is now we got all digitally native assets that you can collateralize. It's usually over-collateralized. There's a similarity between what's happening in the real world in terms of how banks create money from nothing by collateralizing specifically houses, mortgages. But the interesting part, the near-term opportunity, in my opinion, is probably within the next 5-10 years to unbank the unbanked. Yes. By actually providing credit to them.
Absolutely.
So we need to establish something that's non-collateralized.
So we are working on that. Yeah, we are working on that in a very big way. I cannot give away the secret of what we are doing there, but absolutely.
Well, so if you think, no one's going to share it.
No one, this video goes down to millions, thousands, or whatever it does. Anyway, but I would love to talk to you about that. What we are doing to actually make what. So one of our thing is. Sustainability and humanity related causes. So my vision, having been born in Africa, Indian origin, really a global citizen now, is about giving back. So between 10 and 20% of all our profits goes towards that. And we use not only that, but think about our masternode programs that we have nodes, which is where you can earn money just by staking on your mobile, by having your mobile phone on. So imagine the village guys who all generally have mobiles of some sort or the other. Just by owning the mobile phone, they can earn some money to buy their vegetables or grains or whatever. So that's where we are going with some of the stuff we are doing.
Okay, so is this generally speaking on existing coins, or you're creating?
Existing.
All right.
So it's the whole thing behind how we do the split of the monetization piece to the user who, and I'll give you a hint, all these users, do these guys share their revenue from ads and all these things? We are the product. So I keep saying this for the last 3 years. We are the product. Believe me, and I know it, being Sun Microsystems, and one of our colleagues, Eric Schmidt, left us and went and became CEO and chairman, as you probably know, Eric as well. Eric was one of our colleagues, right? So he went there and made that whole Sun vision come through. And Google don't even pay people to view Google pages, yet they're making all the money. Same thing with Facebook, Twitter, all these people. So we are trying to collateralize that model into a totally different model so that the user is now part of the ecosystem. Yeah, that's why we call it paid banking. That's why we call it paid banking and paid user.
Yeah, I think most people don't realize that Google doesn't index the World Wide Web, right? You're not on the World Wide Web when you're interacting with Google. Google index is maybe 4%, probably closer to 0.4%.
Correct.
So we here have seen many attempts for people to sell data like from the user itself, and none of those have actually stuck. And we've probably seen 100 or so over the past 5 years. Have you seen any that actually were successful in doing that?
No, because I think there's a big problem just now with all the data privacy, secrecy, and the new EU laws that are coming out. And the last Facebook attack was one of my neighbor's childhood friend's son who went and won that case, Ravi Nayak. And he won that Facebook court case in Europe. If anyone's watched The Great Hack, you know, him and Brittany Kaiser, who was the whistleblower. So I know them both, right? And how they got the money back from Facebook for doing those sorts of data sharing with the Cambridge Analytical scenario, okay? So what we are looking at is to create another alternative that makes people more inclusive with consent, only if they have consent. Do not share. We'll never share IDs, never share people, names, addresses, nothing. But if they are visually seeing something, or if they are contributing anything into any form of community, web service, news, journals, all these people, they should get paid for it because they are the product.
So going a little further down the rabbit hole, and let me know if you that's not your expertise, but I have this theory that blockchains are not a viable solution for PII, period, looking at GDPR, CCPA, and that.
They are not. That bit I agree. They are not.
Okay. So my thesis is that all PII information, including all asset information, because assets are only relevant in context of PII, will have to live as cryptographic primitives mapped to something like a graph-based solution. Is that your opinion too? Or
absolutely, with graph technology. Absolutely, with graph technology. So that bit we are looking at.
Oh, okay. So
so we need to talk offline.
Do you have seen a solution that addresses?
I've seen one or two who are trying to do it. They're nowhere.
Opinion on that? But
yeah, I'm sure it's bad. I'm sure it's bad.
Well, I mean,
or the concept is good, but the implementation isn't that great.
Yeah. So the introduction of a does it still provide this if and when it's being traded on a centralized exchange? Right? To that extent, don't you think that the US dollar is more decentralized than Bitcoin, for example?
I don't think US dollar is decentralized because the treasury, central banks, and all these guys, in a way, control it. How much it is, how much is printed. The distribution is like our old Sun and Siemens days. Yeah, the computers are all over the place, and you do matching and mirroring and using and all that.
Let me point something out. So if you look at the title of the Bitcoin white paper, it's peer-to-peer cash, right? So if you just look at the peer-to-peer cash function of Bitcoin and the peer-to-peer cash function of the US dollar, who do you think is superior for that?
Currently, US dollar.
Okay, do you think that's going to change?
Yes, going forward, because I think some of the newer technologies coming out in the currency market will supersede what Bitcoin really is. Bitcoin wasn't made, in my view, ever to do your, 1 million or 100,000 transactions per second type of architecture or a system for utility. It was not made for that. Yeah, but there are other technologies that have developed on since the king of crypto to do those sorts of things. So that will evolve in the next 3-4 years, 100% sure. And I know 1 or 2 people doing it. And, we are trying to attack it as well. But will it supersede the dollar's dominance? No. Dollar will be there at least at a good high market share for the next 5 years for sure. But the market share will gradually come down. It will come down.
So would you bet me, let's use a small amount, $10,000? What's the period of time that Bitcoin will reach functional parity, or any?
No, I don't think Bitcoin will.
Okay, so any.
Yeah,
any to the US dollar.
To the US dollar, yes. Functional parity, 10 years.
10 years? Okay.
Yes.
So you, in your personal opinion, will see a new unit of account that will take over the US dollar's function in international commerce?
No, I think there will be multiple currencies. It won't be US dollar. That's what I said earlier. With all these CBDCs now, even the currency portion will become decentralized. As I said right in the beginning. So the Chinese will say, you know what? I don't want to deal with dollar. If you want, deal with me in my Chinese digital yuan. The Brits will say, you know what? I don't want to deal in dollar. If you want to deal with me, deal with GBP, digital pound. So they will have a form of an exchange that just does their form without pegging it against a dollar. Currently, things are being pegged against dollar. So something will get worked out how one relates to the other in terms of exchange rates.
Okay, interesting. So I don't know how we're doing on time here. My counter says 33 minutes. I can keep asking you questions forever.
I'm sure. I mean, I could do that. So Paderborn, I was in Nixdorf at Paderborn during the ATMs and all those developments. So I know it, fintech from the smart cards and the chip cards from those days.
Oh, did you ever visit the outlet in Bielefeld?
Of course I was. I went even to the defense center at Bielefeld 30 or 40 years ago. I can't even bloody remember. In Bielefeld, it was late 80s. That's right. In Bielefeld, in the late 80s, they had a military camp over there, and we were doing virtual war simulation.
I know.
In those days, in the late 80s.
I was this poor schmuck who had to come at 6 and screw in those big round network discs, if you remember.
I remember. How can I forget those?
That was me. So you were.
Oh my God! I probably went past you and didn't notice it.
Yes, exactly. Yes, because he didn't sleep on it.
Yeah. I remember Bielefeld. Yeah. It was probably 40 minutes from Paderborn or something like that. Oh, I've been there for you.
Yeah, exactly. Yeah. So
is that right? Yeah, I remember it. I remember having the best venison in wine mill in Bielefeld. There you go. And getting drunk with all those army officers, very cheap.
Yeah. The British barracks were down the street.
Yes, the barracks. That's the one.
I used to ride my bike along those. So I think what the tears out of everybody else at this point in time. So we probably should take this portion offline.
Yeah. So Rajan, back to you. Rajan, host, take it over. Christian, connect to me on LinkedIn or something. Patel.
Already done.
Already done. Well done. And then we'll go offline WhatsApping.
For sure. Talk to you soon.
Wiedersehen.
Back to home base, Rajan.
Rajan.
To the studio.
Rajan Saab, you're muted. You're
Yes.
muted. Okay.
I think it was good, your discussions, but we were missing Mark.
Yeah, well, Mark's got a bandwidth problem there, so it wasn't our fault.
He got disappointed.
Mark, next time, come here to our office, I think.
Yeah, Mark needs to go to Nuki. Yeah, Mark needs to go to Nuki and use somebody else's bandwidth. Surprise! Would you believe it? In America, in California, you have bandwidth issues. Crazy.
So thanks. It was a good insight discussion. I think we go for the next. Thanks for your time here.
Okay.
Thanks, Miro. Thanks, Christian.
Thanks. Nice, Christian. Nice to see you.
Bye-bye.
Yeah. Christian is here again for the next last panel, right?
Oh, can I ask him questions now?
Fire away. Happy.
What is the next session?
The next is going to be Sydney. Sydney is going to moderate.
Okay, fine.
I know Sydney.
Yeah, Sydney, he's been on US. That's about crypto banks, fintech, DeFi, funds to ETF, ETPs. Miru, you have to be here. Don't go away. Yeah?
Okay, I'll stay.
Okay,
you always rope me in what that I bargained for.
Yeah. Thank you, sir.